All right, welcome back to the Deduction Desk. My name is Joe. This is Sagar. Today we're going to be focusing on adding children to your business. We get a lot of inquiries about this. Does it make sense for you to add your kids to your business? How do you add your children? How young can they be? How old should they be? And the ins and outs of the nuances of those types of opportunities. So really, main benefit, in my opinion, of adding your child to your business is most of us as parents, depending on the age of the kids, we're paying them to some extent anyway. So if we can get some level of a deduction for it, does it make sense? I think the question is, how do you show that the kid's actually part of your job, even though they're 12 years old or 10 years old?
Right. I mean, the golden situation we're looking for at all times is being able to recategorize some of your lifestyle stuff as a business expense is ideal, whereas spending $1 to save 35 cents is not smart, right? And what I mean by that is you already need to go buy a new car. How can I get this as a write-off through my business, right? Or if I'm already spending money on my kids, which I think is like
90% of people.
Yeah. Then is there a way to make this more tax efficient?
Sure.
Versus, I don't need a car, I want to save some money, I'm going to go buy a G-Wagon. I don't think that's like a smart way to save money on taxes, right? Or finances or anything. It's just, spending money for no reason. Before we jump into a lot of this stuff, I think there's a lot of important things we need to clarify, both to cover ourselves as well as cover you that's watching. And that has to do with what you can and can't do when it comes to writing off your children, right? So I'm going to do a little reading here. I'm going to try to keep it, brief, but it's extremely important. And our lawyers said we have to say this. Rule number 1, bona fide and legal, right? The person you're hiring has to be doing an actual job and they have to be legally able to be hired and working for you. Your child cannot be your head of sales and they're a 6-month-old infant, right? And you can't put them on a $200,000 commission-based income and say they're closing deals left and right? These are things that, are common sense, but in this world, you got to say this again.
Every loophole's been trying to take advantage of.
Yeah, and there's a lot of people who do very well for themselves that this could be like a question they would ask. Can I pay my newborn child $200,000 a year? It's like, no, you can't. If you find somebody who's trying to figure out a way for you to do it, they're probably doing too much. So that's rule number 1. Number 2, ordinary and necessary, right? You're not just hiring someone because you want to put them on payroll because they're your kid. You're hiring them because they're bringing a function to your business that's actually necessary and useful for you. If you have a business that has no requirement for social media at all, and you hire your teenage daughter to be a TikTok manager for your company's social media accounts, is that a real job or are you just trying to figure something out, right?
And that's kind of a common theme in I feel like all the videos that we talk about, ordinary and necessary.
Yeah.
Any tax conversation that maybe you're having with yourself before you bring it to a tax professional of, am I able to do this? I think should start with, can I justify this move being ordinary and necessary?
100%.
If I'm going to hire my 9-year-old daughter to work for my financial planning firm, what would be ordinary and necessary for her to accomplish duties of my position? It's not trading.
No.
It's not emailing clients. It's not reaching out to clients. It's not being a receptionist. So what are they? Sure. Yeah, maybe she can file. She can put files together for me. She can ABC order them. Those are things maybe that...
She's artistically inclined. She designed some t-shirts for you and you pay her as a contract on a contract basis for that, or obviously you want to do W-2 instead of contractor basis, but as a short-term gig for something like that. These are legitimate things that you spend money on, and you have to legitimately have your child working in that business. You can't be paying them to sit at home and play Fortnite. They have to actually come and do something for work. They have to show up, and they have to... Joe's trying to see how Fortnite canceled.
Okay, I'm not going to work out, actually. Forget it.
All right, so
Roblox, not allowed to deduct.
Reasonable compensation. That's the third important thing that we want to stress before we really dive into some of these loopholes. You can't overpay or underpay someone, especially if they're a related party. Everything must be arm's length. It must be a fair wage. If it's a minimum wage job, you're getting paid minimum wage. If it's, a super complicated task that you're asking them to do and you're underpaying them, that could lead to as many problems as overpaying someone for something that they're not really doing for you. So keep in mind these three important things: has to be a real job, has to be bona fide. It has to be an ordinary and necessary task for your business, and it has to be reasonable compensation. With that, we can later on, we're going to dig into some of the payroll tax stuff and what qualifies versus what doesn't qualify for payroll tax. Is another little extra, benefit you can get for yourself, but we'll save that for later in the video.
But legal has been taken care of.
Legal, we're done. Lawyer, you can stop watching.
So now turn this off and we can talk about what we want to talk about. I think a good place to start is there a certain age that you would recommend, someone has like a child could legitimately be part of a business?
Yeah, I think it's a double-edged thing, right? It's like as you start making more money, it becomes more beneficial to hire your child, right?
Right.
The point of this entire exercise is to shift income from your tax bracket to their tax bracket. Their tax bracket typically is going to be lower than yours. So as long as that is your strategy and that's the route you're going, the age, it depends on what they're doing.
Yeah,
right?
I mean, social media, if they're part of your social media, meaning like marketing side of things, then the age is doesn't really matter, right? Sometimes
Modeling.
you're using very small children, all the way up to, let's say age 18.
Yeah, we see signs and billboards all over the road we're on where, we have like a family on the billboard and it seems all nice and cute, but I guarantee you that person is writing their child off of a modeling contract. And so, using the image of your children, the age doesn't matter there. It's, once again, it's bona fide. If you're 12 years old, but you're good at QuickBooks, you can probably work for your family's firm doing some accounting work, right? So there's different things that the age is almost irrelevant. It's just about, like Joe said earlier, can you look an IRS auditor in the eye and say, yeah, this person is doing this stuff and here's the proof of everything they do.
Right, my 9-year-old's doing QuickBooks. She will do it, I will show you. It's on Roblox, but she'll do it. What about high-end age? Do they hit 21 and now it becomes a lot more complicated, or it doesn't make a difference?
No, we have seen people get supported by their parents their entire life.
Yeah, true, that's true.
So you can always employ your children. It may not be to their benefit at some point if they're 35 and getting a payroll for cleaning the office, but hey, there's no limit there. One
thing I see, and I kind of circled it as a question, is, and I know the bill had something coming out about this, but paying for child services, right? Having a business that pays for child services, whether it's for your own child or for a business. I don't know if this is something that has passed yet.
It hasn't.
It hasn't. So if it did, and I own my own business, would I be able to put my own child into services and write that off?
Great question, and I think that's the reason why a lot of this stuff has not passed yet. And what Joe is referring to is the ability to pay for daycare and childcare through your business, right? So it's like, can you hire your kid?
3 weeks old.
Can you hire this 3-year-old baby and then have her then pay for her own childcare?
Yeah. Well, and then I'm going to pay my wife as the childcare person, so it'll be a double whammy.
Right.
This is a joke.
Luckily for the IRS, that law does not exist yet, but these are some of the things they're thinking through.
And they don't watch YouTube, hopefully.
Well,
not yet.
So I think personally that's a whole can of worms that's going to be opened. They
haven't been ready to open up yet.
And it hasn't been opened yet.
Okay.
So
they're going to see this video and be like, Jesus.
Let's talk a little bit about why you would hire your child on payroll, right? So I'll give you an example of some athletes we've worked with in the past. And in this case, as everybody knows, when an athlete, especially somebody who maybe came from more humble beginnings, starts making a lot of money, there's a lot of people they support. And, there's a clip with Shaq where he talked about this too. And, the first thing that we usually advise to people who are in a situation like this, whether you're an athlete or not, if you're supporting the people around you and you're giving them money anyway, instead of just giving them a gift, give them a job. Find something for them to do for you, whether it's working on your personal brand, whether it's being your personal assistant, whether it's
paying your bills,
right? Get a job for them, put them on payroll, issue that income. That's a tax deduction for you. You're now not only, when you're just giving a gift to somebody, whether it's your children, whether it's your parents, whether it's your cousin.
Well, there's a limit, right?
There's a limit, right? Well, now that limit's $30 million, so you may not hit that number, but there's still a limit in terms of what you're paying the tax for this person, right? So if I'm giving Joe $50,000 as a gift and I'm making $1 million a year, then I'm paying close to 40% taxes on that $1 million and then giving him the net after. Whereas Whereas if I can hire Joe for $50,000 a year to do some work for me, once again, those first three things we talked about, please, he's going to be doing a legitimate thing for me. Right. So if I hire him for the $50,000, that's a tax deduction for me. At my tax bracket, that's what, $20,000 or so of tax savings that I get? And now I give him the $50,000 that he wanted anyway. Joe's tax bracket, let's assume it's low. It's not. You can see his watch. But so let's assume Joe's
more humble on these videos.
So let's assume Joe's in the lowest tax bracket. His tax liability is now, theoretically, if he's married with the new stepped up tax rates, the standard deductions, his tax liability is almost nothing. So I save $20K, giving him the $50K I want to give him. He works for me and he earns that money. And on top of that, Joe pays almost no income taxes on that. Yeah. So that's the strategy behind this. And that's what we want to kind of be implementing and putting into practice to see how we can do this at a level where there's just benefits to be had. Going, further down that rabbit hole, we can start thinking about not just the tax savings that you get from paying somebody. I think that's pretty simple. But also there's payroll tax savings, which is, maybe something you hadn't considered about this and something that certainly people don't discuss enough when they talk about the savings. So payroll taxes is an important concept here because if I'm putting somebody on payroll, if I'm putting my daughter or my son on payroll, technically I would have to pay a payroll tax if it's a W-2 and so would they. However, there are certain scenarios where you can avoid this payroll tax, right? So if the child is under 18 years old and you have a sole proprietorship and each parent is a partner, and on top of that, the LLC is taxed as either a partnership or a single member LLC, then you basically can put yourself in a situation where the payment to your child, there's no FICA taxes for that child. If they're under the age of 21, then there would be FUTA taxes are avoided, but you still have FICA taxes. So what does that mean to you? That means that that entire payroll tax conversation that we just had basically doesn't exist as long as your structure is correct. Keep in mind, if you're an S corporation, this rule doesn't exist. So this only exists for LLCs that are sole proprietorships or partnerships, and all parents are involved as partners if it is a partnership. Important little structural things that can save you an additional 15% on when you pay your child this W-2.
I'm just glad the IRS makes it easy for us to, comprehend. Right? It's, I'm just so thankful for that.
Well, and we should be thankful because it keeps us in a job.
Right. Yeah, that's why we're here, right?
So let's just quickly run through an example, right? We kind of touched on this, but I think generally this is not like a super deep dive we need to do here. This is more about, hey, this thing exists. There are some pitfalls. Make sure you're following the rules that make it legitimate and make sure your structure is accurate so you're avoiding payroll taxes on the income you're paying to your children. But, if we just run through some of the math here, say you're in 32% tax bracket. Let's say you have two children that you want to hire to work for you. One's going to be a social media manager. The other one's going to be a receptionist at your office. That's $24,000 that we can now pay to these two kids if we're paying them $12K each. Why do we want to use $12K as our number? Because the standard deduction right now is $12,500. So if they make less than $12,500 working from you, they pay no taxes on that income that they get. Let's assume also that the way that we're paying them is through a sole proprietorship that we own, single member LLC, and the two children are getting paid on W-2. We now avoided the payroll taxes, both for ourselves as well as the children. We reduced our taxable income by $24,000. The kids pay no additional taxes, and the tax savings based on that 32% tax bracket is about $7,680. So are the kids probably spending 12 grand each? I would assume so.
A year? I mean, my daughter's going on a month. 5,000. No, I'm just kidding. That's not true. But I could imagine some families, depending on how old your kids are, and what they have cars, they have school expenses, they have other
college
things. Yeah, college.
Right.
Even actively going to college, and maybe it's up and above the room and board and the education. It could get to that point on an annual basis.
And imagine your child is working for you, for your business, and they're going to college.
Right.
And they have tuition that they want to pay, or they have other things they need to pay for, like just board and their meals and all these other things. That it's an expensive endeavor. You could hire your kid, you could employ them, you could take the personal tax deduction, and you can now pay them on W-2. They can use those W-2 earnings to support themselves in school. So once again, follow the rules. As long as you follow the rules, there's a lot of potential benefits that can be had here.
And I mean, this probably should go without being said. I don't think we mentioned it. You do have to own your business in order to hire them, right? You can't just work for a W-2 business and then decide, well, I'm going to hire my kids and set up my own business. Your business has to have income. There needs to be revenue. You need to be able to justify the business that you're running, and your kids are paying that. But I figured I'd just throw that out there because
and look, we didn't say that. We didn't say that before, for sure. And we've done a lot of these videos now, and I think something you guys will pick up is a common theme here is with the way the current tax bill is, having your own business is really
beneficial.
It's night and day, the tax savings and the differences that can be had there. So if tax savings are a big thing for you and a big part of your personal financial planning, which, when you're paying 40% of your income to something like that, it probably should be, then, all signs always point to start your own business.
Great. Thank you guys for joining, and we look forward to seeing you on the next video.